Eronmosele Aziba is one of the investment analysts at Afrinvest, and he takes his holidays very seriously as well. But first, he takes his job really seriously, don't you?
Yes, of course I do.
But we love holidays in this part of the world. We just had a ram market across the highway where Channels here is located. And then yesterday, all manner of heavy-duty, multi-million vehicles packed on the highways, just shopping for rams.
Yes, I mean, it's in line with the celebration, the Muslim celebration that we're having. I mean, ram is the traditional...
Ram is big business here. We need to find a way to capture this market, shouldn't we?
Well, I mean, it's a source of income. I mean, investing in
rams.
Well, animal husbandry, which is under the agricultural
But Nigerians seem to have a preference for this particular type of rams that were ahead. Sometimes are coming from the Sahel region, Niger, Chad, all the countries around the northern, northeast, northwest part of the country.
Given the terrain that you have there and the breeding of the animals, it's often believed that they have been better bred. In terms of...
I learned their taste here.
I was just going to say that in terms of the taste of the meal, it's often said that they taste better. So we could also say that's one of the reasons why we see a lot of interest.
Ram importation. We spend so much money here on very good. We love good life here, don't we?
It's everybody loves good life.
We love good life. We love good taste. That's who we are. That's okay. But again, we just also love the market. So let's go into the very big story around Nigeria's Eurobond and the corporate bond market. That's where Eronmosele Aziba is here. Today, the news is out that Access Bank, one of Nigeria's tier 1 lender, has redeemed $350 million of its Eurobond that is out. Access still has about 2 other dated instruments at the global marketplace. Access Bank is one of the 7 Nigerian banks that have their bonds listed dollar overseas. Of course, the Nigerian government has about $1.5 billion out there and another diaspora bond that's already floated. So we'll all put all of that together in front of Eronmosele to talk to us. And they've done one or two few infographics to talk to us. Yes, Eronmosele, let's go with the Sub-Saharan Africa Eurobond performance. The story in the last couple of days was that African Eurobonds are doing well, globally speaking, because we seem to have the sweetest yield curve, even more than a number of other emerging market issuers.
Yes, I mean, there's been a lot of interest in African Eurobonds. If you look at performance of Sub-Saharan Eurobonds, so you look at the likes of Kenya, you look at the likes of Nigerian Eurobonds, South African Eurobonds. Of all this, the Kenyan instruments seem to be the best performing yet to date. But if you think about the fact that in most of developed nations, we have lower interest rates, given that most of them have adopted an easy monetary policy over the past year. We've seen a lot of interest come into our African markets, where investors can get higher yields on their investments, and this is one major driver of what we've seen in our markets.
But again, if we look at Africa, South Africa is still the king in terms of the size of the Eurobonds, and again, but of course, South Africa seem to have some of the lowest yields, and that's part of what we're pushing out there to our viewers there. You can look at the current yield, about 2.2%, the lowest for South Africa's sovereign 2019 maturing paper.
Yes, the South African instruments have the lowest yields because we know there's been a lot of interest in their instruments. I mean, if you think about the fact that the country has been going through some sociopolitical instability, which could potentially have deterred investors from even taking part in investing in their Eurobonds, this has done little to change sentiment. There's still been a lot of interest in their market. So this just goes to show the attractiveness of these African instruments, which a lot of investors have been taking advantage of.
What makes Nigeria's Eurobond or diaspora bond particularly impressive or very attractive to foreign investors?
Okay, well, currently, if you're looking at prospects for the country as a whole, we've seen an increase in oil prices. Some of the challenges that we're facing, that oil sector with regards to disruptions to oil installations, that has also been curbed. We've seen production volumes go up. we've seen the general conditions within the economy improve. Looking at GDP, there are already talks of the economy actually coming out of a recession as early as the release of second quarter of GDP numbers. So prospects are looking a lot brighter. Also with regards to FX liquidity within the system. Since second half of 2014, we know with the drop in oil prices, we had a serious FX crisis in our markets, which has deterred investors. But now we started to see a lot of developments in that space, increased FX liquidity, and this has created this sort of positive ambience for investors to come into the market. And so this is one of the attractive points of our instruments.
The Nigerian authorities are looking at going back to the markets sometime, perhaps if we can still do another Eurobond before the year runs out. But if you look at the yield at issue and the yield and the current yield for Nigeria's sovereigns, out of these 5 sovereigns that we have out there, the longest is year 2032, which was the one we floated in February.
In February,
yes. In February this year. And you're looking at the yield at issue and the current yield. And if you take it even way back to what we issued in 2013, it looks like the yields are coming down. What does that tell me as an investor?
Well, if yields and prices have an inverse relationship. So in a situation where you have yields coming down, means prices are going up. And this is a positive sign. I mean, for an instrument yield at issue was about 7.9, which is down. Current yield is about 6.7, which shows that there's been a lot of buy interest. And even in terms of looking at year-to-date performance of this instrument, year-to-date price performance is up about 7.7%. I mean, almost all the Nigerian instruments are actually up year to date. Similar for most of the other sub-Saharan African Eurobonds. But the best performing year to date in terms of price change is the Kenyan instrument.
Let's move on to the corporate side of the Nigeria corporate Eurobond. We have about 7 banks: Access, Diamond, Fidelity, First Bank, GT, UBA, and Zenith Bank with their corporate bonds with various ratings out there. If you look at the yield on these instruments, some of these yields are 1, 2, 3, few steps higher than the sovereigns.
Yes. So for the fact that it's a bank and looking at the credit rating of the country in which the bank operates, it's expected that investors would require a premium on a higher premium than they would require if they invest in a sovereign. So this is one of the reasons why we're seeing higher yields on these instruments. Also, considering the fact that the challenges we had in the market and the impact that it had on performance of some of these banks in prior year, we saw a lot of sell-offs across some of the Nigerian corporate Eurobonds, the likes of First Bank and Diamond Bank also, as well as the Fidelity instrument. But since the turn of the year, we've seen a lot of investors take significant position in these instruments because they were trading at a significant discount to par, and now we've started to see a lot of traction in them. I mean, for the Nigerian corporate Eurobonds, the best performing in terms of year-to-date price gain, you have the Diamond 2019 as well as the First Bank instrument. So it shows that there's been that interest in these instruments, which is positive.
When you see increased corporates at the global DCM window, what does that tell about the position of the economy in general, the state of the financial services industry, some concerns at some point by folks about the stability of the banking system?
Well, it's a general positive in the sense that now they have the confidence to go into the market. We know for a greater part of 2015, 2016, we didn't really see any banks come to the market to float any Eurobonds. But just this year alone, we've seen Zenith Bank, we've seen UBA also, which is also positive, which shows that the situation is improving and is generally getting better.
Yeah, very interesting. I just took a look at the table, and I can't find any 2015 Eurobond at all. That looks like a watershed year for Nigeria.
Exactly.
We saw 2013, that was from Fidelity, from First Bank, and from GT Bank. 2014, yes, we had a couple. Access Bank was the only corporate, yes, that did an issue towards the end of towards the end of the year. That was in October, almost a year ago, that Access Bank did that $300 million US. So 2015 was particularly, no one wanted to go to the market because even the Nigerian government could hardly go to the market in 2015.
Exactly. With all the challenges that we're facing, especially tied to FX illiquidity, it was a major deterrent towards coming to the market. I mean, even confidence levels were rather low. So there's that likelihood that any bank that might have come to the market would have had challenges with actually raising the needed funds.
Now we have a stronger buffer in terms of the FX portfolios. We have a very decent capital importation from outside, despite some concerns about whether these are hot monies or whatever. But do you see where we are in terms of our fiscal position as a basis to say, look, we expect more of these corporate issues moving into the end of the year, moving into 2018, before we run into the 2019 election, stormy waters. Our elections are always stormy anyway. So before we run into that, do you think we have about a year window or year and a half for any of these corporates to say, look, for Access, for example, we've redeemed $350 million US. Let's quickly go back to the market and make some other, bring in some cash because we need to stabilize what you call our capital position. We need to expand, we need to upgrade, we need to do a few things and be more resilient for an economy that is just trying to see a glimmer of hope from recession.
Well, we strongly believe if the need arises for any of these banks to raise additional foreign capital, they have that needed impetus. If you talk about the fact that we've seen the FX situation improve, there's that confidence that they can come to the market and actually raise the needed funds. So we could see more of them come to raise within the end of this year and even at the start of next year. Although from a capital base point of view, most of the banks, especially the tier 1 banks, are adequately capitalized to meet their obligations. They are also in line with regulatory guidelines on what their CAR should be. So if the need does arise, then we might see some of them come.
We'll have another conversation another day, maybe with you, when we look at these corporate issues from the non-bank and why we hardly have any from our own jurisdiction out there at the Eurobond market. Thank you. And that's the man from Afrinvest, of course, one of Nigeria's investment and securities firm that had a bond tied to the Brady bonds, if you were in the market, that was 20 years ago.